Good morning. Great to have you on the show and congratulations for an excellent set of numbers. 12% growth rate on a quarterly basis. Help us understand, break it down for us, how much of it was a function of volume and how much from pricing?
Hi, good morning, Anisha. Thank you for having us on your show. And yeah, thank you. This quarter has been also a consistent performance from our side, from our growth journey. This quarter, we have seen a year-on-year growth of 25% on a standalone basis, and we have been able to maintain our margins at 29% EBITDA levels. So that's, yes, it's good considering the backdrop that we have in terms of volatile environment that we have seen across the world. We see that this has been a fairly robust performance. In terms of your question about the growth, where it has come from, we see that both volume and price, both has been the driver for us in terms of growth here.
Hi, good morning. Thank you so much for speaking with us. I understand that you've recently bagged a couple of contracts from European firms as well. Tell us about what's the size of this order, and overall, given the fact what's happening in Europe, what kind of opportunity do you see from that geography?
Oh yeah, so that's a very pertinent question for us in our context. Yes, we are back to orders from one of the European clients, and this is again an existing client who has been working with us, and we have just consolidated our position with them. In terms of significance of this contract, rather than the size, more what we wanted to talk about is two primary things. One is the trend that we are seeing, that what now people are talking about, rather than China plus one, we are now talking about Europe plus one, and that's what we are now seeing it happening and crystallizing for us here. And two is the speed at which we have been able to support our clients with their request and delivering the products is something which has been commendable in this case. And that's the primary thing. In terms of amount, it's not a very significant one, around $10 million of revenue that we can expect over the next few years from these two contracts. But the key point is about the drive, and key is the direction and the trend. And if you see the kind of conversations that we have been having with our existing and potential new clients as well, the kind of demand that we are seeing from all the clients across is significantly very encouraging.
Material prices, have they come down enough for margin sustainability?
So, two things. I'll break it into two parts. One is if what we have been consistently mentioning about our business model, that all our costs are passed through, and hence price increase or price drop does not impact our margins. However, having said that, yes, we have seen that the prices over the quarter has softened a bit, around 10 to 12% softening we have been able to see in the various raw material input prices. However, in the last part of the quarter, we have seen that the prices have just stabilized a bit and not seeing any more direction on either side for now. However, we are keeping a keen watch on that, because that's something which will be a focus for all of us as we go. But again, mentioning the business model that we are in, we do not really get any significantly impacted on the margins front because of the movements in the prices of raw material or other input costs.
Okay, so that's the word coming in as far as how the overall setup is looking like. But also wanted to understand from you, in terms of your capex plans going forward, what's the capacity utilization at the moment, and overall, where do you see it scaling up, let's say over the next couple of quarters?
So see, what we were saying, what we've been guiding is that the growth trajectory, in terms of our capacities that we have, we are able to see that we'll be able to sustain our growth for the next year as well. However, we have started deploying our capital for and building capacities for the growth which we expect in 24, 25 onwards. And that's what we have been deploying our capital for, especially in the latter half of 24 to 25 starting is when we will need additional capacity, which is what we are doing capital deployment for. If you see, we have raised even capital so that we can prepone our capital deployment because of the demand that we have been seeing with our customers, and hence on the capacity side we are fairly covered.
Throw some light also on the integration of Tanfac with your businesses. Are you seeing healthy traction in fluorine-based products?
Yes, that's something which fair. So let me again break this question into two parts. One is the integration with Tanfac. The integration with Tanfac is going really smooth. I think we have seen it better than anticipated in terms of the we have seen limited number of challenges or any issues. In fact, the integration has been very robust and stable. In terms of business integration, in terms of business supply chain. Uh, yes, we have been seeing a lot of interest on the fluorination side. Fluorination demand has been great, and supply and assurances coming from Tenfac has only enhanced this interest of our clients into us as a partner of choice for them. So yes, the Tenfac integration is working well on both the counts for us.
And your inventory days have come down this quarter, but they still remain high at around 266. What's the working capital situation looking like? And is there inventory reduction plan also on the card?
Yeah, so as we had guided even in the last quarter and a quarter before as well, that we have been focusing keenly on the working capital side, especially on the inventory side, and that's the result that you're seeing in terms of the reduction in inventory. We see this trajectory to go further. Hopefully, there should not be any more distortion happening in the world for us to not, hopefully that is there. However, if you see from an operating cash flow point of view, also we have been able to generate 97 crores of operating cash flow over the first half of the year, compared to and PAT of 81 crores. So that's something which is really our efforts on the operating efficiencies has been giving us some dividends now, and we see that trajectory moving continuing here.
Before we let you go, just throw some numbers. What are the chances that, given the fact that the first half performance has been quite strong, what are the chances that you will beat your revenue guidance of 25 to 30%? And on margins as well, going forward, we had seen a level of what, 28% in the year gone by. Going forward, is it expected to ebb down to the 25%, 22% levels? Because that's what has the street a tad bit concerned.
Okay, so let me take on the revenue side. Revenue side, we see due to this incident that has happened, probably there will be next quarter maybe a little bit of a lower growth compared to others, because there may be impact in terms of revenue a bit. However, if you look at from a year-on perspective, we should be fairly in the range of the 25 to 30% growth margin that we have been suggesting. We should be fairly there. And in terms of margin, I think we should be, as we've been guiding, we should be in the range of 26 to 28% EBITDA margin. If we can beat it, it will be great, but that's what we will keep guiding to the market, around 26 to 28% EBITDA margin. So in all, a good quarter. We look at a good year, and more importantly, if you see from the growth and the long-term vision perspective and long-term perspective, I think we are in a very sweet spot for now, and hope that we are able to capitalize on all the opportunities that's coming our way.
So tell me, how is it that you're going to use the proceeds from the recent QIP?
Yeah, so see, we have raised around 500 crores of equity money from the market, and we are sitting on a cash of around about 200 crores. So that is around 700 crores of cash in our balance sheet, which is what we are going to be deploying over next 24 months to develop three new projects, or set up three new projects, which will take us 670 odd crores of capital deployment, and that would help us in growing in fluorination chemistry, deliver our LOIs and contracts, and give us enough capacity for growth for next three to 4 years going forward.
Right. Great to have you then on the show, Vishal, and thank you so much for answering all of our questions. And congratulations once again on a great set of numbers.
Pleasure. Thank you very much, and thank you for having us on your show.